Hello, Ben. Thank you for joining us.
Hi, how are you?
I'm great. How are you?
Good. Back in the office, so that's a good sign.
It's an improvement already. So you are actually one of the few specialists in Israel on SPACs, right? You work for the Phoenix.
That's right. It's funny because I moved to Israel a year and a half ago, and I think when I made Aliyah, I would not have thought that I would have used my expertise in SPACs as much.
Well, a year and a half ago, it's exactly when the SPACs came into our life. Though it's not really a new investment vehicle, and they have been around there for years. And I understand that you are familiar with the SPAC industry for a long time. So can you tell us what is actually different in the SPACs today compared to, say, 5 years ago? And then we'll talk how come they became so popular.
Well, when I started investing in SPACs 5 or 6 years ago, I was working for a hedge fund in New York called Hourglass Capital. Hourglass was a $6 billion hedge fund, and we invested in SPACs from the IPO, and my portfolio was around 500 or between 500 and 800 million dollars in investments just in SPACs. And at the time, the sponsors were not as high quality as they are today. You had many, small teams of people who were basically retired from, a public company. They didn't even have teams, large teams. It was very hard at the time to convince high quality private equity firms, social, venture capitalists to start SPACs. So it was a long change, like from, again, 2015 up to 2019 to get, sponsors like Gores, like TPG, like Klein.
But we also have people like sponsors like Shaquille O'Neal and Alex Rodriguez, who are completely have nothing to do with the stock market. They are just celebrities, and they are also becoming sponsors, which makes many people feel that maybe SPACs are some sign, one of the signs of the bubble we have now on Wall Street. How do you see the celebrity SPACs? Let's define them like that.
Look, we're investors, so we'll stay open-minded on all the SPACs out there who want to do, acquisitions. I always tell sponsors, and I've told sponsors or people who are thinking about doing a SPACs for many years, listing a SPAC is easy. Finding a good target, creating value for shareholders, and having that stock perform for multiple years, that's difficult. And, celebrity or having a good network is great for the IPO, but to find a good deal, to execute a good deal, and then to help the target company becoming a successful public company, that requires experience and real skills. So it's fine to have, I guess, a celebrity involved, can open doors. However, you always need to be careful that there's someone very professional, very experienced, who can deliver on the hard work.
So what is the right company for SPAC? We see better companies, we see large companies with the revenues and even profits, but at the same time we see many companies which are still have no revenues, and maybe one might think that the venture capital and the private equity don't want to fund them anymore, so they delivering them to the public market.
You see that in traditional IPOs as well. So I think it's I'll take the question a bit differently. I'll say, if you're on a board, especially of a tech company, right, and you were considering an IPO, let's say 2 years ago, it was the right thing for the board to consider a dual track, right? Either an IPO or a sale to a strategic company. Today, for a board of a private company, it's the right thing to do a triple track: SPAC, IPO, and sell. And sometimes the SPACs will fit. Sometimes the IPO will fit. Sometimes selling to a strategic company will fit. It really depends. It's really case by case. I think what's interesting as well, and people I think, especially outside of Israel, don't realize, the traditional IPO process has become very rigid and very difficult. Why? Because now all companies file confidentially. So investors don't see the numbers for many months. Then companies flip to a public filing. Usually they're expected to do that only for 2 weeks. And then you have the roadshow for 10 days. So if you think about institutional investors, retail investors, they only have like 3.5 weeks to do the work. It's usually not enough. And if something happens in the world, during those 3 weeks, the whole process of the IPO, that probably took a year of preparation and a lot of money, can go to the garbage.
So in the process of a SPAC for a private company, the institutional investors have more time to maybe to dive into the prospectus and check the data? That's what you're implying?
Yeah, I think, a big change that happened over the past 5 years is the fact that now SPACs are expected to raise pipes before announcing. So during this PIPE process...
Before an announcement, you mean before they merger into the SPAC, right?
Correct. Before the announcement that the SPAC is merging with a private company, right? Usually for 1 or 2 months, the SPAC raise additional capital through a so-called PIPE with institutional investors. And during those 1 or 2 months, I can tell you from the inside, you have a real meeting with the company. You can ask questions. It's not rushed like during the IPO. And I think the companies love that, And also the companies love the fact that during those presentations, they are free to present projections, which is not the case in a traditional IPO. Then once the announcement is made and is public, they can release those projections to everyone, including retail investors. Retail investors never see projections in a traditional IPO.
Well, that was my next question about retail investors. We see them also entering a lot of SPACs, and the question is if they do understand the risks, because from what I see, companies going public through SPACs are generally more riskier companies because they may be more dream companies like electric vehicle, like autonomous vehicle. We see lots of them. They don't have revenues yet. And the question is, do you think that the retail investors will not be disappointed from those stocks later on?
Retail investors will be disappointed, but many of those companies, like retail investors, might be disappointed in any company they invest in. I don't think it's different. At least in the de-SPAC process, in my opinion, they see more information. Because again, during the traditional IPO process, only the best paying institutional investors have access to the projections, because the projections are only given by research analysts of the banks that are doing the IPO. And basically you get those projections by taking your phone and calling the banks, right? Retail investors never see those projections during the process.
Okay, so
in the case of a de-SPAC, they have more information. Now, can the information be wrong or exaggerated? Can retail investors make mistakes investing? Absolutely. Absolutely. And we'll see that playing out over the next 2 years.
Okay, let's see. We'll hope that all the projections will prove to be pessimistic or at least realistic. And thank you so much, Ben, for joining us.
Thanks for having me.